All right, guys. So today we took a short on GBPJPY, and we're just gonna go over why we did that and what was going on. So first, as you wake up, you go to forexfactory.com. You want to see what's going on in the news. So we have CPI at 8:30 for Canada, and then we had 10 o'clock CB consumer confidence. So normally, regardless of what the news is, I don't trade at the time of the news. If we have a position open and we're deep into profit, we'll take 50% of our profit off and then put our stop into profit and let the rest ride if we go into more profit. But with trading news, there's slippage. So you just want to make sure that you're not entering right before news, only because the spreads during time of news is very large. So if you're risking $500 and you're trading news, you can potentially lose $3,000 if it goes against you, because the slippage can be so large and your order may not be taken. All right, so yeah, so we took this trade around 9 o'clock. Yeah, so we took it around 9:15, and let's just break down what we saw. So what I'll do is we'll go first on the hourly time frame. And so right now on the hourly time frame, we were on an uptrend. Price was moving bullish. All right, so the price was moving pretty bullish, but we did see on the 5-minute time frame a supply zone. Right, so we saw this supply zone here. So what I'm going to do is I'm actually going to go right back here. So this supply zone right here. So we saw this supply zone, and this is a high probability supply setup if the price did come back to it, right? This would be a high probability setup. And the reason why, I'll let you know in a minute, is one, we have a lower low. So the price broke this low, indicating weakness in the price action, right? So we made a lower low right here. All right, so low, lower low. So when we're in an uptrend, we have higher highs and higher lows. But once we have a lower low, this is an indication that the price is getting weaker, right? And we could head lower. Now, on the 1 hour time frame, we are on an uptrend. So on the 5-minute, though we see this downtrend, we're also being aware that on the larger time frames, the price is going to be moving bullish overall. So we're not going to try and take shorts past this lower low. We'll probably just take it here because of that reason, and as well as we do have a demand zone down here. So this one, we have price weakness, and two, this supply zone is a high probability supply setup because we have a gap right here. So normally this is called either an imbalance. So some people call this an imbalance, where the candle there's nothing filled right here, no wicks or anything were filled on the next candle, so the price has to come back and fill the market and balance it out. So a lot of people see that. Or how we look at it when we're trading supply and demand zones is that when there's no wick or anything that comes back to the price, that indicates to us that there's still orders up here that need to be filled, because when the price pushed up and came down very sharply, a lot of money that was still left in this area. So we're anticipating that the price is the supply zone is gonna get tapped and then come back down, because these orders need to get filled. So there's more shorts that need to get filled, right? So that's what we were looking at, right? So those are two reasons to enter this trade. Now, entering the trade. So now what we would look for now is we would look for the price to break below this level right here. So once it breaks below that, we are in the trade, right? So boom, we're in the trade. Now we're in this trade, and before we continue, the reasoning for my stop loss, my take profit, is because we have a demand zone down here. So supply zone up here, demand zone down here. So what a demand zone is, So supply zone is when you get aggressive selling, and a demand zone is when you get aggressive buying. So you can see that we had orders right here, the price completely pushed, and just like a supply zone, when we had this gap, we also had a gap here where the price didn't come back into the demand zone. So we would be anticipating once it came back to the demand zone, the price would push back up, right? So that's why we actually put our take profit in this area, right? So